Live Thursday Q&A with myself and with the Futures Fanatic Rod and Dee, who will be joining us in a little while. So let's kick this off. Just make sure my microphone is on. Sometimes I start talking and I'm like, oh, great. All right, so let's see who's in the room. Can we get a hello, whoever has joined us? And then we're going to move on to some charts, talk order flow, trading, order blocks, all things order flow. Hi, Ocean. All right, so let me just share my screen here. All right, so let's try this. How's this? I'm gonna try and move it into the middle. See what's happening. Okay. All right, so today, bit of a chop on crude oil. Nice rip from ES post FOMC. That was pretty much expected. Yesterday, if you guys were in Rod's room, I was talking about this. Oh, there he is. Okay. Rod.
Hello. I don't know what my headset is doing here. Let's see. Let me.
Oh, that's a mic.
There we go. Does that sound better?
Yeah.
All right, cool.
I just have a little lavalier thing here.
Let me put this in the headset here. There we go. All right, cool. Let's fix this.
Yep. Do you want a minute?
I mean, I don't know. I don't care if it's crooked. It still works. Who cares?
Yeah, it's look, it's live, so you know.
That's right.
I've got my window here now.
I'm having a brand new, first time, three machines built. I'm very excited.
Oh yeah, you said, yeah.
Yeah, it's gonna be pretty fancy. I'm gonna have them stitched together and networked, and they'll be so powerful and confusing. I'll have no idea how to use them.
See, I'm lucky. My husband is a computer guy. Like
Right.
he used to work for banks as well a long time ago. So yeah, if I need anything computer related, he deals with everything. He actually changed our entire network system a while back. Like he said, "Do you mind if you don't have internet for a while?" And I was like, "What?" And he goes, "Oh yeah, I'm just changing everything." And I was like, "Can you do it on the weekend? Because you know,
Right.
I cannot handle it all going down and me just going, what? So yeah, so good luck.
I'm gonna have 128 gigs of RAM in each machine. I mean, that's like bonkers.
Yeah, it's crazy.
By the way, check out this cool thing that I got. I mean to hold on. Let me see here. I'll turn this on. I rearranged a bunch of stuff here. This will be in the background eventually. I'm sure you have one of these. Hold on. This is to tell people in the other part of the house that, hold on, here we go. Can I bring it in here?
Oh,
on air.
Right. Yeah.
I got my little on air. I'll just hold this as a necklace.
See, I don't have that. If we kind of, if he's like talking to me or something, I just do WhatsApp. So I'm like,
that's right, yeah.
Quiet.
Shush up.
But this is a small house though, so you know I don't really have too many rooms. It's London. Everything is small. You live in just shoebox. So yeah. So Ocean Blue says, D, I thought at least outarm. Oh, I thought at least I could arm
I think that means I could I could beat you in an arm wrestle, but
yeah. I posted my I posted my fitness photo back from like 4 years ago, and I have like the tiniest way. It's on Twitter. You can have a look at it. So I have these like massive Arnold Schwarzenegger arms and delts and stuff. So it popped out of my my kind of memories, and I was like, whoa, Jesus.
That's in your $2,000 bikinis, right?
It's not actually. It's in just my training
okay.
thing. Yeah, so it's just leggings and like gym
one
gear.
of your
basically.
bedazzled
No,
things.
no.
All right.
No, but I do post those every so often as well, which is quite funny. Okay, so let's have a look at the charts here. Let me just change our view here. Who else is in here? Come on, let's hear it. So we know that Ocean Blue is here. Ocean Blue is like inventory at this point. Just like stock, you know, he's always here. Great questions as well. So let's see what's going on with this crude oil here. We had a daily demand on crude oil. So now this is a daily chart, and we're getting a little bit of a bounce from there.
It almost got to my 96 level. I was talking about 96 today, which was an area that the VPOX had consolidated over last week. Yeah.
Yeah. See, that's my general demand area.
Yep.
And then just below it, we have the daily range exhaustion point. So it's pretty close. I mean, I always look at any kind of prices as a zone. I don't necessarily look at it as just like a singular price. Ocean Blue, Dee and Rod, would prop firms hire both of you for sure? Right. Well, they do kind of hire us because we work for a lot of prop firms, Ocean.
Yeah.
Like, how, if you mean like what, hire us as in what, to run the firm? If that's what you mean, I already have my little prop firm on the side as a part of Blahtech. But I wouldn't go somewhere else to run a prop firm. That doesn't really interest me at this point. Rod, would you run a prop firm? Because I know you were involved with Collective 2 and stuff. That's kind of a prop firm.
Yeah, a little. It definitely has elements of it. I think we do it in a different model. No, I wouldn't. First of all, I don't want to work for anybody, but also like the retail online, the retail folks like T3, S&B Capital, those kinds of things. Not interested in those at all. And then the bigger ones probably still wouldn't have us because you have to be some quant and stuff now. So it's all moved to computers. There's not many desks in Chicago's anymore.
No, even here, a lot of them are just looking for like PhD people, and usually straight out of university from like top level Ivy League style. Because obviously here we don't have Ivy League, but we have universities that are preferred. So
Oxford.
Well, actually, for technology, it's Manchester University. Bizarrely, yeah, it's kind of like our version of MIT. And that's what they like to hire. Then they like to hire people from London Business School, things like that. So it's still very elitist, Optiver and Jane Street and all of that. So yeah, they wouldn't hire manual traders. It's not that kind of business. Yeah. All right. So yeah, I did a couple of trades today, 3 trades. I did a failed auction in crude oil. So let me show you guys that. So here it was. It was basically a bounce from this same area that we're at now, straight back into the initial balance. And then I just ran it up to this VWAP and it started to stagger. So you can have a look at that on my members coaching session, which is a paid for service. So it's once a week. And it runs on Thursdays at 10:30 p.m. Sorry, 10:30 a.m. Eastern. It's 3:30 p.m. GMT London time. So yeah, that was one of them. I also attempted. What was I attempting in gold? I attempted to go into a failed auction. That didn't work, so I bailed out of that, even though we didn't really move from the average session range. I mean, look at that. So it did kind of go up to the average daily range, busted it, turned around, and then did nothing. And now we have a contract rollover, so this is not going to be the same chart for tomorrow. The final trade that I did, I was actually talking about ES potentially going through to basically just continue that move that we saw yesterday post FOMC rate decisions. That was my final trade. Yeah, and then now my one last trade for the day, I am attempting this long, I call this the day range fill trade in crude oil. Might not go anywhere, so I tried one already, got out for scratch because I didn't like what I was seeing since the initial bounce edge acted as a bounce area. And yeah, so now I'm kind of giving it one more go, slightly lower. If that doesn't work, we're going to bail, and that is the end of the day. Rod, what have you been trading today? Anything
Yeah, I've been relatively active in kind of both directions. So I just posted to Discord, I mean, 10, 15 minutes ago. I took my first shorts on all the stock indices and got small little retracements off those highs. But I've kind of been long and strong the S&P since around 40, 45, and taking it off at right around here, 40, 45, 40, 75s. And if we get another kind of stop run push, which I have an indicator that I built that parses it's not an indicator, it's just it's kind of an order flow tool that parses the time in sales to look for small order executions. In other words, you know, anything under 5 contracts in the NASDAQ or 15 in the S&P, that's small ball. And when those are getting taken out, I'll look to try to reverse. So I'm still going to try to fade this pop if we get more strength in here, especially in the Dow. So that's what I've been doing.
Awesome. Yeah.
Yeah.
So again, similar outlook, different methodologies. Funny that. Okay, Christian is here. Hello, Christian. How are you doing? Very good to see you guys. So what have you guys been trading? Never mind us. How did everybody do today? Did anyone get caught up in some chop in this crude oil? Did you catch the failed auction? Because that's like a pretty standard Market Stalkers style setup. It also happened right at post NY cut. So again, another part of the Market Stalkers method. So if you didn't catch that, just go over level 2, beginning of level 2, and make sure that you pay attention, practice, go into the live markets and look for these events. It's how you learn how to trade. Okay. Oops. I just love it when I'm kind of jumping through my tabs and then I move away from Restream and I have about 1 million tabs and I'm like, oh, where did it go? Maybe I should close some tabs. That might be an idea. But I need it.
The bond complex today have been pretty active into. We're short the morning pop. We got what we call our extreme turn signals, which are a combination of ADX and RSI that look to identify some turning points. And we haven't really retraced dramatically, but the ZB and the ZN have both come in off of some pretty spike highs and nice separation from our major T line or moving average as well. So
it took a while to get going yesterday after the release.
Yeah, the original reaction in the notes and gold was very subdued, but then it popped around as soon as Powell started talking.
Yeah, I actually faded gold towards the end when I was in your room. You remember that? So
yeah, you got your crude oil up to almost 97, just ticked a little bit below it.
Yep. Let's see what's going on. Just jump through my time frames a little bit. Yeah, there's a bit of a supply there, some sell-offs from earlier. So if we manage to close into that, then it will go a little bit higher. So there's always like a little bit, whenever you run into these order blocks, there's always a little bit of a reaction, and then you have to watch what happens around it to actually see whether it holds or whether it kind of trades through it. So it's definitely a skill. Alex wants to know, do you trade the open or do you wait? I personally, because I don't really trade equities that much, I personally wait until the first hour of trading is done for my crude oil and gold. I find that all of the highest probability setups come after the initial balance is done. The initial balance is the first hour of trading. In equities, you might get some opportunities straight off the open on certain days. So Rod, why don't you explain that part?
Sure, but I have a question for you though. But you already have waited an hour because the pit sessions is prior to the stock cash open, right? So right when the cash opens, you're ready to go with crude oil, right? You're not waiting an hour from the cash session of the stock market, right?
No, No.
Yeah. So
No.
you're ready to
So
go at the
I'm
same
basically
time.
ready to go
Yeah.
half an hour into cash.
Yeah. Okay.
Right.
Right.
Yeah.
Basically
Yeah.
half an hour. Okay.
Yeah.
What we do is we use a percentage of ATR in the overnight session, and for us, the overnight session is the true total overnight session from the 6 p.m. Eastern Standard Time reopen the day before, all the way through about 8:30 Eastern, an hour before the cash sessions when we're taking a look at it. So we're saying how much volume and how much range traded, and we don't care as much about the volume unless it's set up some interesting volume profiles. But basically just say, hey, has the overnight range, is it 50% of the expected daily range or ATR? So for instance, as an example, let's say the 7-day ATR that we use right now is 80 points. That's 80 points for the whole session, not the average daily range that D uses. So that'd be 80 points for the whole session for a 23-hour session. Was the overnight session at least 40 points? Half of that. If it wasn't, then we decide to have a guideline of just sitting on our hands and waiting for the opening half an hour. But again, it's just a guideline. So it's something that as you gain more experience, you could certainly jump in earlier. But if you're newer to the game, just that's one of the mechanical, systematic things you can look at.
Yeah. Okay, so this level here is a little bit reactive. So we'll see whether that can push through it. If not, I'll be out of that very quickly. I did get a pretty good entry here, so I'm like all the way from down here. So this is not going to be the biggest trade. It's just like a trade towards the end of the day, just to add a little bit onto the P&L. So I'm not looking for like 2 or 3 hours or anything. I'm just looking for slight buffer.
NASDAQ traders, remember we have some big earnings too after the bell today, so we're going to have
Apple, isn't it?
Apple and Amazon and Intel and Roku, but Apple and Amazon are the big players. So just be aware of that. Apple generally reports exactly at 4:30 Eastern Standard Time, and then Amazon reports right at the bell, just like most firms. But Apple waits a half an hour, which you used to not be able to take advantage of because the futures markets were closed, but now they trade for that whole hour.
Alex also wants to know, did you expect the pullback? Which pullback are we talking about? Do you mean during the initial balance? I think that's what he must be referring to. The pullback. I mean, that's about the initial balance. So I don't really trade necessarily the first hour. I don't really expect anything, but based on the open sentiment, you can kind of have a pretty decent idea of what kind of a day you're going to get. So for example, for me, if I get a really large initial balance, that is always a little bit more difficult for momentum trades because you've had such a large range. So really, I would be looking to fade any kind of a large initial balance area in the form of either the failed auction or an auction phase. If we extend the first hour of trading range, and today there was a failed auction in ES. I didn't manage to catch this because I was on something else at the time, but I did see it happening, and then I only managed to catch it when it finally broke out because I had like a few things on, and up until that point, I wasn't that crazy longing into these ADRs over here, so I was kind of waiting to see what happened there, and then I finally caught like this nice pop to the upside. That was a more obvious trade for me. So did we expect a pullback? It's not something that you would expect. You just kind of watch the markets in real time. This is the main mistake that people make when they're novice traders. They're like, did you expect this to happen? The way you should look at it is that you have the open sentiment that gives you largely the direction on the day. You then have high probability reversal levels. Whatever happens in between shouldn't really bother you, right? It's like you have to use orientation points for your trading. And in between is just noise, okay? I might be interested in ADR levels, I might be interested in the value area itself, and I'm interested in what happens around the initial balance edges on an intraday time frame. The rest of it, whatever happens here or there, like I really couldn't care less because it's not my level. Does that make sense? It's a different type of looking at things. Dee and Rod, if you can tell us what was your last losing week and losing month? Just curious about reality for professional traders. My last losing month, honestly, I can't remember. It's probably over 2 years. I have had sort of scratch months, and that was January 2020, so before all this COVID nonsense happened. Losing week, again, I have not had one in like forever, so I don't even remember. It's probably like maybe 5 years or something now. So yeah, when you get to a certain level of consistency, you're just not going to have losing weeks and losing months. You might have a losing day here and there when maybe the market is either quiet or perhaps you're not reading the market that well or something different is happening and you might have gotten hit a few times, so you decide to stop for the day. But generally, once you've reached consistency, you really shouldn't have losing weeks and losing months, because that means something is not right. Like, you'll never make money like that. You can't make it into a career. So Rod, what about you? When was your last losing week and month?
I don't know the stats offhand. I mean, I guess we're only talking about our day trading accounts, right? Because I'm having
not
this year I have a couple positions that are like the worst from a
some of
long-term
mine are underwater as
conviction
well.
investments I've ever had. I've lost more on a couple positions on a dollar and percentage basis than I ever have in my life. But on the day trading stuff, it's been a long. I'll tell you one thing I'm very proud of. I haven't had 3 losing days in a row since 2016. Nice. So that's almost rare. Not through 3 losing days. I rarely string together even 2, but I haven't had 3 losing days in a row. So without that, I don't think I could have had a losing week. No, you obviously could if you had a big losing day. But I'm not exactly sure. But to Dee's point, to everything we say, professional trading is only about risk management. Ultimately, it's not about how much you make. So once you get to that point, you're truly professional when you control your risk. And I hate losing, especially in day trading, because it's not required at all. I haven't built some sort of theory around a company or where I feel it's going to go long term. I don't give 2 craps about it. If the ticks aren't going in my direction, I have no problem cutting it. So
yeah, same. Yeah, that's the beauty of day trading, that every day is a fresh new day, brand new day. You can take it as, like, I always say, like, I'm a little bit like Drew Barrymore from 50 First Dates. When it comes to trading, when somebody asks me, "Oh, hey Dee, what's that trade that you did on Monday?" and I'm like, "What?" Like, I have no idea what you're talking about, because once my day is done, I wipe all of my trading decisions and everything from my memory, and I go to sleep with no worries. When I was a swing trader, it was always like your mind is always one on like that, with one eye open on the charts. Oh, what's happened? You kind of wake up in the middle of the night. Oh, I'm just going to check it. And I hated that about swing trading. This is why I went into intraday, because you don't get that. Like, everything is done at the end of the day, and you can go to sleep like peacefully. So yeah, for me, it's much easier, and because of that, because I can read what is happening in the markets with the help of the statistical averages in many shapes and forms, order flow and order blocks, aka supply and demand, I'm able to find the trades and context on most days. But every so often, I do have a day when nothing is really moving. People, like, things are quiet, so I can't make money on that as an intraday trader. So I need the movement. This is why I choose the instruments that I choose. I choose things that are very liquid intraday. Crude oil, gold, equity indices, right? I am primarily a commodities trader, so crude oil and gold are my 2 strongest products, and I absolutely adore them. But I do, occasionally do ES and NQ. NQ, I have, again, generally with equity indices, I have a love-hate relationship because when I first started trading them, they were very quiet. ES had an entire daily range of like 3 handles as opposed to 62 handles these days. It's a big difference in volatility, liquidity, everything. So I do like it a little bit more these days because once you catch a trade, once you get the context of the day, you can actually catch a really nice run. I'm one of the traders who cannot sit in a trade that's not going anywhere. It literally mentally just crushes me. Some people are very comfortable with that. They're like, "Oh, cool, yeah, I'm just sat in a trade that's gone 3 ticks in the last 2 hours." If my trade is not in profit, by the time it's like half an hour later or maybe 45 minutes, I'm done. I move on to something else. So yeah, losing days, losing months, not really a thing once you get to a certain level.
I also find, we're futures traders, and it's really hard to get too passionate about gold, a stock indice, a bond, or whatever. And that's why I think just stock trading is so much more difficult, because in the thesis of why you're trading that stock that day, sometimes there's news and there's other things, and you have this other crap going on in your head around, it should do this or come back here or whatever, because it's a stock, right? Because it's a company, it has management, it sells a product, and there's all these other emotions that are part of that make, again, I'm talking my own book, but I don't get emotional about these instruments that we're trading at all, right? They're just vehicles for making money. Whereas stock trading, I think very often, not all tickers, but a lot of stock traders have big losing days because they have this sort of conviction about being right, because it's a stock that they think they understand what the stock should do, which is just ego and nonsense. So better to trade futures.
Yeah, except they would need to brush up on their skill sets with all those biases. It would never
Right.
work.
Well,
Like imagine
I was there. I
intraday
spent a
trade.
good amount of time. I lost $160,000 shorting Chipotle because I'm like, what is their fucking IP? They make burritos, right? You get in that state. I'll never do that again.
Oh,
I've
look,
learned my.
I lost my first account of 70 grand, and that was, I mean, luckily it wasn't any money that I needed or anything. It was all profits. But yeah, one of my first mistakes, and only mistakes really of that kind, was that I really thought I was a Forex trader at that time, and I got really biased on a Euro Aussie trade. Up until that point, I only did like euro dollar, but I'm like, oh, I'm going to branch out. I wasn't ready to branch out. So I got really biased and I kept moving my stop. I was using big stop losses back then. It was more like swing trading with the aim to hold it for about a couple of months, maybe 3 months. And I used to do very, very well with that. But this particular trade kept going down and down and down against me. And that's how I learned what a margin call is. So I was like, great, never doing that again. And that's how I started with the psychology side. And I wanted to make sure that never happens again. I started learning about the fight or flight response, how you can battle it on a physiological and biological level. And I think eventually we all have to go through that kind of growth as intraday traders, or any kind of traders really. But somehow position traders, they never, because they just track the underlying. They don't really try to outperform anything. Whereas swing trading, you're still trying to outperform it, but for the duration of the trade, you are still tracking the underlying movement. So it's kind of like in middle of the middle. So you can still get very, very biased because it's like, oh, it has to go up. Well, it doesn't. Like it just doesn't have to do anything that you want it to do. And once you realize that and you stop marrying your trades, it gets much easier. Just don't get too beat up over one trade that went against you. I find that some people are embarrassed to lose a trade and they're like, oh, I have to be right. Why? You don't have to be right. That's just pure ego. Like it has nothing to do with reality. Read the market. If you're wrong, cut your trade, try again in half an hour when you have a bit more information. But don't just sit in a trade for the sake of it, man. It's like the worst thing you can do. The Flea says, S&P says that their traders can have one losing day each week. If a trader has 2 losing days, they get called into the conference room. Do you know what? I used to hate that. When I worked for Prop, you used to get these like oh yeah, risk manager wants to see you. Let's have a meeting. And then you have like this rather pointless meeting about how you and even if you have a good like week and stuff, like let's say there's this one guy who really hated that I had these like bumper days, because I would do like consistent and then I would catch a big run, and he's like, yeah, you held that trade like longer than you usually do, and I'm like, yeah, it was a momentum trade, like sustained auction, what's your problem? And he goes, yeah, it's just inconsistent, and I was like, look, did I make money or not? Like, what what do you want? And then also, if you would have like one losing trade that maybe went into a little bit more, then you would also have to have a discussion. But it was so unproductive. They would never really give you any advice. Like, hey, how about you do this? No, it was just like, yeah, okay, well, no, not the best. Yeah, try not to do it again. It's like, what is the point of this meeting? And I used to hate the conference rooms, and yeah, it just that whole corporate bullshit. Like I'm so glad I'm not in that anymore. Rod, how did it work in Merrill Lynch? Was there a lot of that? Like, did you have to go and justify your decisions to your boss, or how did it work?
My time at Merrill Lynch, I was just a financial consultant, not really, so you're gathering assets. It's not the same thing. So they don't measure anything by your P&L. They actually measure things by the metrics they care about, which was, commissions, asset growth, account opening, all that. Yeah, all that stuff. But when I ran a SO shop and those types of things, we just looked at risk a little bit differently. And then in this modern time, I'm actually working again with a friend named John Netto, who I've mentioned quite a bit. We're going to try to implement the Netto number in some other ways, because the thing with, and I'm not familiar with, with the risk managers at SMB or T3 or Jump or any of them really, but most of the more sophisticated places, their risk models differ depending on principal versus profit, right? So, which is how it should work, right? If it's house money and you're losing house money, then they have the right to call you in the conference room sometimes, but maybe not for consistency. That's stupid. But anyhow, there needs to be different models for how traders are compensated, based on true alpha and risk-adjusted returns, as opposed to just absolute returns relative to risk. So I'm working with John. We're going to try to introduce more of that even into these online prop firms where their rules are ridiculously simple. I don't know why people constantly complain and violate them. They're simple as heck. The problem is that they're so simple that they don't account for traders that are actually able to generate real alpha in the markets on the profit side. So that's my take on all that. Yeah. By the way, I just got short the NASDAQ at 44. 744.
Let's bring up that chart. Where did it go? It's been a micro.
I think we're going to see a flush push here, where they just fry some of the toads, caught off guard. Looks like a magnet to about 85s on the S&P.
Okay, right around the ADR level. So you've just gone short, have you?
Yeah.
Okay.
I'll probably get short MES at 85s too. Just a starter position, 5 contracts.
The way Rod trades, he kind of campaigns around the price. So it's like, this is not like the end. He has a zone where he's looking for various entries and positions as and when he gets his signals. So they can be pretty wide as well.
Yeah, we're out of balance now.
Yeah.
For sure.
Just gonna have a look at some volumes there. Okay, so let's put that on the left. Still tracking what's going on with my crude oil. That's still kind of pushing. Still stuck in a little bit of a range though. So it really needs to get above this like 97.11 and then back into the initial balance and then potentially up to this VWAP and supply area, another order block where the market sold off. So that would be the ideal target. Whether we're going to get there or not, that remains to be seen. It's something we cannot control. Ocean Blue wants to know, has this summer been different from other summers for you and your style of training, Rod, or trading?
Me?
Yeah.
Oh. Yeah, I mean it's been better, a lot better, because we finally had two-way markets, right? So we had a lot of time where we just had essentially low volatility and direction markets were, had drift. Hold on a second. So I just sold 79.5, do another at 80 quarter here. Yeah, so it's been great so far. I mean, a lot of the time you hear about the summer lull, but that hasn't really been the case. Some of the most volatile days we've had have been low volume days during August on a lot of summers. So we're coming into August. We'll see what happens. I was talking to other sets of traders that were saying that this year is different because so many people started to get out and leave even earlier, step away from the markets in May and June, especially in June when the euro went to parity.
Yeah.
Every trader in New York and Chicago, a lot of them that have tons of money, were like, shit, it's free in Europe. Let's get on a plane and deal with some of the hassles of travel and get away from the markets. But again, there's so many algo participants and so much liquidity now that things move around all the time and all day parts and all times of the year. And
Yeah,
at least this year, they're moving both directions, thank God.
Yeah, exactly. I mean, I've noticed since COVID in the last 2 years, it's been much better. Usually you would have the lull for the second part of July, all the way to about maybe the last week of August, when everybody kind of starts to slowly come back. Although, again, it depends what you're trading, because some of the products would stay quiet until the second week of September. So that never used to be good. So it was like, I actually used to take the entire August, just nothing, because there was no point. It's just wasting time. But since COVID, it's been very, very lively. So obviously I've welcomed that with open arms, and I've been able to trade equity indices again, because they were extraordinarily boring to me before that. So yeah, that's a good thing. So I wouldn't say that it's any different, like trading wise, because I still have the same levels. Apart from the extra volatility, nothing has really changed markedly when I'm actually looking at the methodology. There is more action during lunchtime, which never used to be the case. Usually, especially in crude oil, you used to have a huge lull for lunchtime, to the point that if you get any kind of a signal for entry, it would be a fake out. And then you would have the time after the lunch, suddenly everything would start moving again. So that's changed. You now almost have like an additional day trading time zone for lunchtime. But I still don't necessarily like to position myself with new positions in crude oil. Instead, I might look to go into equity indices or something for a bit, because usually there's this like lunchtime hour drift that typically goes the opposite way of whatever the day has been doing up until that point. So that's been a little bit of a tweak onto what I expect from the markets. But apart from all that, honestly, it's just like more volatility, better returns, faster targets. So to me, this is actually very, very positive. Ocean Blue says, note to self, never take Rod to lunch at Chipotle.
Yeah, I really don't like Chipotle. A lot of people love Chipotle, but yeah. Man, I don't know if you guys remember. I blocked it out whenever it was. I was like, back when I was an options trading idiot anyway. I didn't really understand how it all works. So, just buying puts, paying through the roof, and they all expire worthless.
Ouch. Yeah.
Yeah.
I had a discussion with someone who on Twitter today, who was, by all accounts, an institutional trader, and then he was talking about getting involved with these online prop firms and then doing like hedging. And I'm like, what are you hedging? Like, it just doesn't make much sense. Like, what are you saying? And he was going, actually, I'll read it out, because it was. He was basically having this thing about the prop trading model, where he goes, Hold on, let me see. Where is it? Oh yeah, it started out with him going, "Oh, sim or not sim, important is that they are paying. I hope they find a way of hedging the position. In fact, I have an idea of how it can be done." So my response was like, "Well, why would you like? What would be the point of that?" And then he goes, "If the accounts are all on sims, the funding firms make less money. If some traders are making a lot, they are short gamma." And I was like, well, no, if
No.
somebody is making money in the firm, they will put it into a master account that replicates
Yes.
trades into a live. Like,
Correct.
that's not true. Like, you have a
Yeah.
wrong conception about what these online prop firms are. And he goes, "Oh, I find it very difficult to believe, but if you say so, you know much better than me in this business. They have so many PA accounts, the risk will be aggregate. Positions canceling each other. Like, it's not an A and B book model. It's not how that works."
You know
That's what he's
what's
talking
wild
about.
is that sorry to interrupt, but like guys, go to Ape. John and Daryl have opened up the whole community. So whether you like them or not, they're the biggest players now. They're bigger than Top Step in this space. They're the biggest by a mile. Trust me. And they've told you what they're doing. Just go watch their webinars. Okay, they've told you exactly what they're doing. So they have models. They use some of the stuff that I gave them. They can identify very quickly the traders that actually know what the heck they're doing. They leave all the others to fail. The average performance account at Apex churns in 11 days. So why in the world would they put idiots like you guys live in 11 days? They just
Yeah.
churn off. So you fail
Yeah.
your performance account. Now, the 1% or 2% of their book, they got it covered. First of all, they could pay out just in profits from all the bozos that reset their accounts, but they don't do that. They actually
Yeah.
copy them into live, and then they have a relationship with T3. I'm not telling you anything they haven't told you. So
Yeah.
they'll put the right amount of traders in actual live markets so they don't have to worry about copying. They got it covered. The one thing they don't have covered is whether the CME decides to increase their rates, or the CME says you can't have multiple accounts per connection, or the NFA says that you can't do a sim live model at all. Everyone has to have only a single account to exchange. That could all happen. But right now, they got it covered, as do all the other firms. So you guys are overthinking this when you're talking about a hedging book and gamma and
Yeah,
all this
yeah. It's
nonsense.
I was just like, what are you on about,
It's
man?
a
Like, this is
simple
just not
business.
the thing. Yeah. So then I said to him, this is not like stock portfolio where like you hedge the risk with beta hedges in futures markets. It's like, and I said it's a different type of trading, dude. Like, it's apples and oranges. And in the end, he actually realized that I might know a few things about what I'm saying. And then he was like,
Yeah.
"Oh, actually, yeah, I can totally see your point. Yeah, you're right." Because I said to him, "Look, funding talent, tried to pay people out just from the eval fees and resets, they blew up spectacularly because if you can't do math and you can't figure out that anyone who has been consistent for an X amount of months and made like over $5,000 and keeps making money, like obviously that's not, you can't keep him on the sim forever. It's a profitable trader. So it's like, why would you want to let them go and just go, yeah, just keep trading on the sim, man, if you can actually make money from that trader? And it's actually not that unusual to put people on a sim until they prove that they can trade and then to put them back into the live market. In fact, that used to happen all the time in prop trading companies that I worked for. Like half of the floor was on sim because they don't know what bloody hell they're doing half the time. So until they prove that they know what they're doing, they're on sim. But
Well, not only that,
now,
all the truly professional shops for this entire career, there's a lot of traders have no idea what their actual position size is. They know what
yeah,
they can trade. They have no
yeah,
idea if the desk. This was until Goldman and all these firms got rid of their desks. That's how it worked. You could be at Goldman trading a $20 million account that they had levered up to 2 billion. This because back in the Lehman days and all this stuff, they were allowed to do 40, 50 times leverage in their prop accounts.
yeah,
You think they told the trader, hey, you're trading 2 billion today? No.
no,
It's like, hey, you're doing well on your $20 million account. Here's a $500,000 bonus. Thanks for making
yeah.
us $100 million.
Exactly. Exactly.
So,
Yeah. Yeah. They don't
it's
have to
anyhow.
disclose it. It's proprietary trading. It's like
Exactly,
it's their
exactly.
money. They can do whatever the hell they want with it.
So,
Oh,
and the
she's
final thing
blowing
is you guys
notes.
are better off being in sim when you can. The trade day model is
Yeah.
great. The top step model is good because you can get paid out faster and they don't have to do any sort of period of time of waiting.
Yeah.
But aside from that, if all these firms would keep me in demo forever, I'd love it.
Yeah.
By the way,
Same.
CQG changed the name. They don't even call it demo anymore. They call it Perm Sim.
Yeah, you said permanent sim. Yeah. I think that's a great move actually, because that's what it is. It's like, it's awesome.
Yeah.
Yeah. Okay. So, what's the name here? I can't read. I need glasses. I swear my eyes are just deteriorating. I'm going to need reading glasses soon. Nate. Is that right? Nate. Do you recommend trading with a fixed risk reward or hold until you see an obvious reason the market has decided to reverse directions? For me, I like to have a fixed risk reward ratio in mind. But obviously, if I see that the market is not advancing further, I will cut it wherever the bloody hell it is. I am not somebody who will always look for a massive risk reward. But if my trade gets to 2R intraday, I'm happy. Like, I'm not going to look for more. The only time I will look for more is if it's very blatantly obviously a momentum day, like a trending momentum day. Then I will hold. So it's not a one-fits-all answer from my part. On my part, it will be a contextual. So depending on what kind of a day we have, is it a trending day? Is it a responsive day? Do we have some initiative activity? How strong is the auction and all of that stuff? Rod, what are your thoughts on this?
Well, you could. Yeah, I know you could answer it for me. I mean, when it comes to risk, I teach something called the graceful exit, especially if you're a more active day trader, where you can systematically and mechanically just cut losing trades by looking to scratch anything that goes against you very quickly. So that's one easy risk management technique. But the original question was what, I mean, the challenge I have, and by the way, I don't mean to jump on you folks. You have to write and use particular words, use your words. There's nothing obvious ever in the market. So I think the way to read this is, do you hold until you see, something? And my answer is no. I just trade the strategy, and the strategy says control risk and profits take care of themselves, and the profits are at particular lines and levels after entry. So that way there's not a lot of discretion involved. The only discretion is, oh, this trade went against me, I'm going to look to scratch it, and now this one is winning, I'm just going to do everything I can to let it get to the target that's right there on the chart.
Yeah, so you work off of levels. Again, orientation points, very important. By the way, guys, I've just cut this crude oil trade. I think it's losing momentum here, so it's getting a bit late in the session as well. So I'm done. That was just under the initial balance, and it was about a 1.3R trade for me, so not too bad. Again, anything over 1R, I'm happy if it's like the end of the day. But if we're slightly earlier in the session, then I want to see a real move from my reversal areas, from my orientation points, and I typically look to either scale my stop so that I get the 2R, or I will try to find maybe a better entry within the zone that I'm looking at. So there are always ways around it. Simon K. He wants to know, should we chart the full CL contract if we are executing on micros, for example?
No. Chart only the instrument you're trading, because the volatility profiles will look different. So if you trade an MES, in fact, if you're trading the MES, just take the ES off your chart. You just don't need to know it. You don't need to know the volume. The price will be identical, but don't do that.
Yeah, because it's a derivative. It's a derivative of a derivative. So yeah, there will be price differences, ever so slight differences. So yeah.
Well, it's volume differences. The price will be very similar, but the MNQ trades 2.5 times the volume of the NQ, so you're going to have a different volume profile.
Yeah. Blanco says, I've been seeing more and more news about global food supply shortages. Have either of you seen anything in the futures to be able to trade this, such as wheat, soybean? I don't do agricultural, so I wouldn't know anything about that. Rod, I don't think you do agricultural either.
No, and even if I did, it wouldn't be something that I would, it's the old trading places. Do you have the crop report for frozen concentrated orange juice? It's in the gorilla cage. I mean, gang, yesterday you could have had the statement in your hand for the Federal Reserve, it was 75 bips as expected. You could have had Powell's prepared statement, everything he was going to say. You could have known his response to every single question. You would have had no idea or no edge about what the market was going to do. So those kinds of things, they're essentially close to meaningless, in my opinion.
So I definitely wouldn't know anything about that. I haven't even heard about the global food supply shortages. So over here, it's kind of business as usual. We're living in our little bubble. But when it comes to agricultural products, I kind of find them similar to like stock, because whoever trades things like coffee and soybeans and all that, they're always jumping from product to product. Like one week they will be trading coffee, another week they'll be like on corn, and then another week they'll be trading, I don't know, live cattle or something. And I'm like, well, it's like, how do you decide? And that's one thing that really annoys me about stock trading. Somebody actually asked me on Udemy just this week. I have like an undervalued stocks course, like how I pick my companies, and I tell you guys which sort of companies I'm interested in and why, and how I approach positioning and all that. And then he goes, oh, how do you know which company to look for? Do you like not have to look at like 100 stock tickers? And I'm like, well, not really. It's like I have a portfolio of things that are broken down by sector. So I might be looking at about 5 autonomous driving companies that interest me. So I'm not going to be looking at 100 of them. There's only a few of them that actually have merit and that I'm interested in actually purchasing, right? But that is the problem with stocks. That is the problem with agricultural products. You constantly have to like switch because seasonality hits them and they're so affected by weather and everything. I wouldn't even know where to find this information because I've never traded agricultural products, and I'm not planning to. So I'm perfectly happy with my crude oil, gold, ES, and NQ. That's all I'm doing. So yeah. Warren wants to know, Dee, when you're in a trade, do you have your dogs next to you for good luck? I don't rely on luck. Luck has nothing to do with what I'm doing. Somebody asked me
But the
many
dogs
years
are
ago,
always there regardless.
the dogs are not always there because
they are?
no, what,
Okay.
jumping all over me while I'm trying to. They're adolescent terrorists. I do not want, like today on the members session, I had 3 of them here by accident. I thought it was only 2, and then suddenly I hear the droning in the background. I was like, what the fuck is that? So I look over and they're just playing with each other, but I'm like, shut up, like really. And then another one found like a squeaky toy, which I didn't realize was in my office at all, so I don't know how it ended up here. So suddenly it's like it's like I'm trying to concentrate, like I do not need more noise. So no, puppies are not always here, and they might bring, joy and laughter and a whole bunch of things, but I do have gates around my desk. So if I don't want them in here, but I want them in the room, they can just be over there. If I allow them to come in here, that's different. But puppies, babies, anything that can spill juice or vomit on you and stuff, you do not want that around you when you're trading. Okay, so keep that in mind. I even, Ocean, I don't even keep open bottles around me because I'm a bit clumsy, and I kind of like to wave around a lot when I'm explaining things. So I've not been known to knock over a cup of coffee and get it all over me, and then next thing you know, the mouse button doesn't work, and it's dangerous stuff, man. Like one time I did that, I lost $250,000 in the space of like 2 minutes because the zero got stuck. And instead of 100 contracts, I ended up going into 1,000 contracts. And before I realized what was going on, boom, $250,000 down. So don't do that. Luckily, it was like only a fraction of the account, but still, it's a lot of money, So don't don't keep dogs or babies around you while trading, please. Christian wants to know, how much experience do you and Rod have in trading using your strategies? Well, I personally have been trading for nearly 15 years now, and I've been trading with order blocks, which is supply and demand, since 2008. And then I went into professional prop trading in 2013, when I learned how to do market profile, and then I married that with my own ideas of statistical averages, some of my own concepts like time of day and stuff like that. So yeah, 15 years for me. Rod, well, how long have you been trading?
I started trading pretty actively in 1990, so that's a long time, 30 something years.
And was that like
but
the strategies that you're using now?
Strategies I'm using now, so the important thing is there's two primary strategies that I teach and train on, because they're the ones that provide the highest probability entries and the most accelerated path towards kind of mastery. I use literally hundreds of models that can run at any given time. But the ones I'm talking about now, which I call stay in your lane in the range trader, I've been using pretty actively since 07, and then teaching them extensively since 11, 12. Yeah.
Yeah, long time. Yeah. Ben Ryan says Winthorpe plus Winthorpe. What's that?
Oh, that's a Trading Places reference. The
Oh,
GI
right.
Joe with the Kung Fu grip.
Yeah, that's right.
They're panicking. They're panicking, Mortimer. They're panicking. It's required that everyone see Trading Places and Boiler Room. Those are the two movies you have to see if you're. There's a couple others, but definitely.
I've seen Trading Places. Have I seen Boiler Room?
Oh, you got to see Boiler Room, and you have to see also, of course, Wall Street. Those are the ones that are.
Yeah, I've seen that. Yeah. But Boiler Room, I'm not sure I saw that.
Oh, Boiler Room is great. Who's seen Boiler Room? It's really good. Ben Affleck's in it for like a heartbeat, but he's pretty good. The lead actor in that is that guy. I can't always forget his name, but he's really good in it.
It's like my husband. It's like, do you know that guy from that movie?
Like, Vin Diesel's in it too, and he's really good. He's in it. He's in it too. Dee, you got to watch Boiler Room tonight.
I will. Okay. Yes, I've got certain things to do before then, but yeah, just before I go to bed, I'm gonna. Because I like to go to sleep with like some kind of movie or something in front of me. Otherwise, I can't sleep. So yeah, I'll check it out tonight. What do we think about ETF and Bullinox? So I'm funded with ETF. It's one of the companies that I'm funded with. Bullinox, they look all right. I'm not funded with them, but I have a couple of people who are with them. Rod, what are your thoughts?
They're both on my approved vendor list, and I partner with both of them. I do have 1, 2, 3, maybe 10 accounts at Bullinox that are funded, and 10 that are evaluation that I run all the time. It's been interesting. It's the one firm that I've really never met the founders or anything else, but their support's been good and everything's been good. I mean, they're another rhythmic shop, but they get it done. Some people don't like their funded agreements as much. I don't get too detailed on that. And then, yeah, Elite Trader funding, I'm a big fan of. I'm not funded there and probably will never be. I'm just going to run 5 or so evaluations for a while for tax write-off and for training and teaching. But we have now, I saw over 10 withdrawals so far of that first 1,500. So it's going really well.
Nice.
For folks.
Yeah, ETF I'm really impressed with, because I initially signed up with them and passed on Ninja with Rhythmic data feed. And then I just couldn't close trades. And I was like, oh, great. Now they're going to like kick me out, fail me, whatever. So not that I care, but I was like, let's see how they handle this. So I got in touch with support and I said, it keeps saying something exceeded at RMS or whatever. Like, it was a really, really strange thing. And it was more than obvious that it was something to do with Rhythmic. And they actually worked for 3 weeks to try and find a solution. They couldn't do it. And then in the end, they said something went wrong with the connection. So let's just move you on to Tradeovate. And I was like, okay. And then they said, we're going to recharge the balance as if you've been trading. So don't worry about that. You're not going to lose any profits or anything. So I was like, okay, then full props to ETF. Because usually, prop firms don't really care. And if something goes wrong, they just go, meh, sorry, try again. But no, these guys really went above and beyond to try and solve the issue. So full support for ETF. And Bullinox, like I said, I've got a couple of people who are funded with them. So far, I've heard good stuff. But yeah, I haven't had personal contact with them. Somebody also says also Wolf of Wall Street when it comes to movies. Well, I prefer the book, actually, because do you know what? I don't know, Rod, have you read the book Wolf of Wall Street?
Is it written by Jordan Belfort? Did he write it himself?
Yeah,
Is it like an
yeah.
autobiography? No,
Yeah, that
I
was
haven't.
the first thing. Yeah.
Yeah.
So one thing that I really didn't like about the movie is that they made him look like some kind of a moron who just, like an imbecile who just kind of does drugs and he's very rich. But the truth is, he's probably one of the brightest people that has ever lived on Earth. Very charming, incredible manipulator. So that doesn't come across in the movie at all. So I kind of felt they missed the point, the main point, that this is a high functioning addict who has managed to do more in his, like, hazy days of doing ridiculous amounts of illegal substances, and yet had like 100 million net worth. However he did it, it was dodgy as hell, but you can't deny the skill that was involved there. So they kind of skipped over all of that, just kind of focused on the fact that he was falling into soups during dinners and stuff. And I'm like, well, no, yeah, that's kind of funny, but that was not the point at all. So I don't know whether he approved it, whether he thought that was all right, but honestly, I did not like the movie, unfortunately. Have you seen the documentary Flawed? I haven't. Rod?
Yeah, I have. I think it just debuted on YouTube originally. So yeah, I've seen
Right.
Floored. I mean, there's a number of others that in the speculative world that I think merit watching. But yeah, I've seen Floored.
How much time do you guys have, man? It's like I barely like have half an hour at the end of my day, and these people are like, "Have you seen this?" It's like I don't know. I haven't.
Yeah,
Another
there's
good one.
and I'm sure you guys all know The Big Short, and you should
Yeah,
read
The Big
all of
Short. Yeah,
many of the Michael Lewis books. The
yeah.
original one was Liar's Poker. It's so weird
Mm.
how many people don't know how to play Liar's Poker. Like it was like such a staple.
Mm.
So
Glengarry Glen Ross.
yeah,
Coffee is for
that's
closers.
yeah, that's a good one. That's more
Yeah,
on just the sales side, right?
yeah, yeah.
Steak knives, second place, steak knives.
Right. Yeah, high functioning. Yeah, that's right.
I mean, all
Right,
he did
let's
was
see.
run a boiler room too, so that's why you just
Yeah,
watch Boiler Room instead of that movie, because that's all he did was just run a boiler room as well.
right. Right, so we've got a little bit of selling going on in NQ. Rod the Prophet hits again.
No, not much. I've been campaigning around it. It sold some more. It sold some more at 57.5, covered at 30.
Mm,
I'll short again 57.5. Again,
mm.
keep in mind we have the market order imbalance at 12:50, 3:50 Eastern, and then we have big earnings from Amazon and then Apple half an hour later. So
Yeah, lots of stuff to come out yet. It's going to be a lot of action. All right. Yeah, my crude oil was timed pretty well, so it kind of fell off the recent high there. So yeah, I'm pretty happy with that. Pretty nice. Okay. Yeah, it's definitely going to affect NQ. Yeah, it's going to affect all equity indices. Earnings are always pretty lively, especially when it's the big companies.
I mean, obviously Apple's in the Dow. Apple's 6.5% of the S&P,
Yeah,
and it's a huge percentage of the Nasdaq. So
yeah,
the
yeah,
Nasdaq's going to rip all over the
yeah.
place.
Yeah, whenever you have like tech companies that are massive, Nasdaq is always much stronger, obviously. Alex then says, what account size do you recommend, big or small? Plan to trade micros, even if big? Well, if you plan to trade micros on like larger drawdowns, you're going to be there forever. I would say what we always say, because we've had this question, I should like put it as F&Q, like intro, what account size? Because we literally get this like every single time we do these. 50K is your best bet because it's got the best risk profile. It's very achievable when it comes to targets. Just take it slow. Don't like try and go crazy. Give yourself time to adjust to. If you've never done an evaluation, you will need an adjustment period. If you get to the point where you get funded, you will need another adjustment period. So just don't rush. The goal of these challenges is not necessarily reach target at all cost. It is keep the challenge going for as long as possible without blowing up or resetting. Okay. So switch your mindset to being more risk averse. Don't rush. Don't aim to do it in a month, especially if you haven't been trading this way for a long time, if you're relatively new to this game. I'm not saying relatively new to trading, but definitely new to prop challenges and being a funded trader. There's a whole stress element that people are generally unprepared for. So if you learn to expect it and be a little bit smarter with your positioning, then you should be just fine. So try not to reset. There are some companies who will reset your account for free if it's in failure at renewal, so you don't have to pay like a reset fee. If you decide that you want to go a little bit crazy and you're not really in profit and you want to kind of try and get there or drag yourself out of a drawdown, do it just before renewal. Don't do it when you first start, because then obviously you're going to have a whole month before they reset the account to just be sat there doing absolutely nothing. So yeah. All right, let's continue. For gold open, do you use 820 or 830? I started using 830 because honestly, I've kind of tested whether those extra 10 minutes make any sort of difference, and honestly, they don't. Because most of the volume starts when officially Globex electronic trading begins, which is 8:30. So it really doesn't make that much difference. So what Dimitar is talking about here is the COMEX open. So traditionally, COMEX open outcry hours used to start at 8:20. But since the electronic trading has completely taken over, there's no open outcry. Nobody does open outcry trading anymore. So therefore, that 8:20 open is less relevant, which is why these days I just go with 8:30. And honest, I mean, I can show you. So here's a gold chart. Let's play around a little bit. And this is the old contract now because it's going to roll over, but just for the sake of research. So I'm in London, so 8:20 here is 1:20 p.m. So just changing that. So here's your value area there. So that's 8:20 start. Let's not change it to 8:30. There you go. Does that look any different to you? It doesn't. So literally this happens every single day, and when you try and see whether value areas are going to markedly change by those 10 minutes, they don't, okay? So just use 8:20 or 8:30. It's totally personal preference. Another question. So Ben says, I'm considering doing an eval account. Just so many choices now, almost too many. Well, try one. So, you don't have to go for all of them, because the whole point is to see how you do. So, you can pick Apex or ETF, or if you want something with more rules so that you can practice your own consistency and your own approach, then go to Earn to Trade. So that's your option, because obviously, or Trade Day, they have stop losses as well. Nice daily loss limits and all that. So it really depends how long you've been trading, but generally just pick a company and go for it. Like, don't overthink it. There's no need to overthink it. At some point you have to dive in. Rod, what are your thoughts?
Well, right now it's still very platform specific, so that'll all change because Ninja owns Tradeovate. So I think eventually all the rhythmic shops will support Tradeovate. But right now, the two major platforms are Tradeovate with TradingView. If you like to chart on TradingView or look at things on TradingView, I wouldn't trade through TradingView that much to Tradeovate. It's okay, but it's it can have latency and get sticky. So if you like Tradeovate, web-based, mobile, all that stuff, your only options, in my opinion, are ETF, Elite Trader Funding, or Trade Day. Those are two to start with if you like Tradeovate and TradingView. If you like Ninja, you can choose from any of the rhythmic ones, but probably, as Dee said, Earn to Trade if you're looking for more structure, and Apex if you want, Wild West, go for it. Multiple accounts, have fun, all that kind of stuff. The one thing I would not de-emphasize is payout periods. Lots of people are very focused on, just did an interview with the guys from Take Profit Trader who will pay you essentially immediately once you're funded. Yeah, I mean, I'm mixed on all that. That should be a concern once you really know what you're doing and you want access to your profits, not if you're just learning.
No, exactly. I mean, again, shift your goals before you get a payout. There's so many other hoops that you're gonna go through psychologically, mentally. You're gonna grow as a trader. You're gonna grow as a person, and it's gonna take time. So don't expect that today you're gonna get funded. Loads of people get funded and then they blow up in the first week. It's like, why? And it's not unusual. It happens a lot, but to prevent that from happening, you first need to expect it, and the second thing, you have to know how to adjust to that new high pressure situation, because it's not easy. You will go through new account jitters. Everybody does. So just give yourself time, trade small, don't rush into things. Alex says, how many accounts do you trade actively? I personally, at the moment, I have 6 accounts. Some of them I trade via like a script API. So I have like a little trade manager software that we created. So when I ping off one trade, it pings off to a few accounts. So there are sub accounts. And then there's the prop accounts that I have with several prop trading companies. So yeah, at the moment it's about 6 accounts, but that doesn't count the multiple accounts that I have with Apex and ETF. So I don't know, man. It's probably about, I would say maybe 15 or 16 all in. But I don't look at it that way. I look at it as like a major thing. Like one company is one company, another company is another company. So yeah. Rod, how many accounts do you trade actually? A million.
My situation is kind of a mess. I mean, I have six virtual machines alone. Plus, I'm building these 2 others, so I'm doing a lot of kind of silly stuff. But my biggest focus is I still have a pretty sizable friends and family stuff that I trade through Collective 2 at Interactive Broker. So that's normally where my focus is. All the teaching and training though is one of the 6 or 8 prop firms that we talk about. But I've also started to show just some really tiny accounts that I funded with 700 or 1,000 as a little challenge, and they're getting to close to 8 to 10,000. I'll get them to 15,000. So, 1,500% return on those. But I'm focused on those for teaching and training. But yeah, it's too many to kind of count.
Yeah.
If you added all the crypto exchanges, forget about it.
Yeah, I've got some staked coins as well. I didn't count those. Yeah. Because I kind of did like a little experiment to see how that's going to work, and that's still ongoing. I want to see how that pans out. But obviously, when the prices go down, clearly it depends on your timing of going into staking. So yeah, and I went in, I think about a year ago or something. So we'll see. It's not a lot of money in there. It's literally just an experiment. Lilu and maybe others will let you hold 3 micros overnight. Do you guys ever do that? No, I don't. And Rod, I don't think you do either on intraday trading, on the futures trading side, because we're intraday traders. So yeah.
I will rarely, and I'll put it in Discord when it really makes sense. I mean, generally, people like that. They like the ability to swing. That's just so they can hold losers. So don't do that. I mean, the only time it even makes sense is if you are anticipate, like today, right now, is the one time where it might make sense, where if you get in a nice momentum play that's a result of being on the right side of earnings, I could see holding a small amount of micros. But the fact that Lilu allows you to do that, it's generally not a good practice, and no, I don't do it very often.
Yeah, well, I will say in my Market Stalkers Pro development program, I do say to people that it's very dangerous to hold overnight on most occasions, because you have this, I call it the cat and mouse chase between the different sessions, right? So a lot of people imagine that the markets just kind of move in one direction throughout all of the sessions. That's not true. Whoever has noticed and observed the markets for any length of time, you will notice that there's like an ebb and flow to the sessions and intra-session as well. So usually when Asia takes things one way, then you have London that takes it another way, and then potentially New York might take it yet another way. It is very rare to have a day where all 3 sessions just shoot up or down in the same direction, okay? And that's the reason why it's not very good practice to hold overnight. Because if you don't have a stop, if you're using a stop loss, you will be prone to that intraday reversal that goes the other way. So you actually need to have a pretty sizable risk in order to withstand sometimes very big moves in the opposite direction that go against your trade. It's a very difficult thing to do, right? It's unnecessary as well, because if you know how to catch those little intra-session plays, then you can profit from them. There's no need to hold it. So personally, I think it's not very good. And I never hold an intraday trade. The only time I say to people it's okay to trade is if you enter a trade and then you find yourself, like Rod says, you find yourself on the right side and the market goes heavily, heavily in your direction, thereby giving you time and space away from your entry location so that you can handle a little bit of a price going in the opposite direction before it kind of turns around, maybe for another session over the next 16 hours. But it's a difficult way to trade. If you're looking for like swing trading and stuff, these companies are generally not the way to do it. Like you need to focus on long-term charts like weeklies and dailies, pick your levels from those, and then aim to hold it for like 2, 3, 4, 5, 6 months, maybe longer. But no, that's
But
not
by the way,
really
my final take on this is on the stock indices side, I just don't understand it. When I still talk to people that tell me the market's only closed for 1 hour a day, and it doesn't gap at all during those hours, with the exception of NASDAQ earnings. It's the only time. The S&P never gaps. It may be a point or two. It never gaps. So it can gap on opens from the Friday close. So what is the requirement? What are you actually doing that you can't just close, get back all of your day trader margin and reopen the position again? I never understood
Yeah, you remember
it.
there was we had a question in here. Somebody said, "Oh, do you ever trade trapped bears or trapped bulls?" And I was like, "Well, how would they get trapped if the market is open 23 hours?" It's like that nobody gets trapped. You only get trapped if the market closes overnight, which is the case with stocks, like single stocks, right? And then it opens with a gap. That's how you get trapped. But in the markets that we trade, they're they're open all the time, apart from that 1 hour for maintenance. So it does not make any sense.
And why are you giving up all your buying power? Like, again,
Yeah.
everyone who debates with me on that just doesn't understand market. They don't understand the futures markets. They just don't. So there's no reason ever, especially with full contracts, you're giving up all of that. Like if you were trading at AMP, you're going to move from $1,000 day margin to $15,600 exchange margin. Why in the hell are you doing that? It just makes no
overnight
sense.
margins are crazy.
Yeah, just close the position, reopen it,
Yeah.
and you avoid all that. So
Yeah.
anyhow.
Ocean Blue says, Rod, if only given 1 hour to trade your style, which hour would you pick outside the first hour?
Yeah, that's a hypothetical I can't really answer. I mean, all that matters is the time that you can be in front of the charts, right? So what I've mentioned in my room a lot of the time is that the markets have never been better, and they keep getting better and better, meaning there is no quiet period. The only exception to that is the overnight. The overnight sessions are not generally very tradable. So if you're in Europe or Asia, those are not hours that I would be doing anything. It would have to be during the cash session. But the entire 390 minutes gives you opportunity. So choose the hour that or the hour or more that you're available to do it, and trade at that time. Because there's opportunities all the time.
Christian says, which prop firms support MetaTrader 5? None of them. None of them, because the only firm that offers real futures contracts on a MetaTrader 5 is AMP Futures.
Yep.
So none of them support it. I was actually playing around with the idea to do something with that, because we actually use, on our prop trading side, we actually use MetaTrader 5 for hedge funds. That's the product that allows us to do a lot of admin. Well, it actually automates a lot of the admin on our side, and it allows me to do like risk control and a whole bunch of other things. So it's like a very expensive product. So yeah, it's kind of like a Bloomberg terminal. So yeah, I was kind of thinking of maybe getting that out to a wider audience, because we do have a prop trading department, but I don't have any evals or anything. Like the entry into my my firm is very lengthy, because it requires me monitoring you for about 6 to 12 months to see how you're trading before I even put any of my money behind you. Holding micros overnight can be interesting. Lol, I agree. Wake up to, hold on, I'm just keep trying to get a wrong comment. Wake up to a blown account. Ouch, man. Yeah, worst business practices. Yeah, totally. Yeah, not good. Here we go. Why are you guys wasting time with chart analysis when it hits speculative data? It's a guess game. Stop wasting time. Wait for crypto regulations. That's when we all get rich. Hey. Oh, mate, you so don't have any idea what you're talking about. I guess this is a random who just jumped into a live. First of all, we are professional futures traders that make a lot of money from this, okay? So whatever your thought is, and this is not chart analysis, we do order flow trading. Entirely different. I do not use chart patterns. That's like ink stains, man. It is not what we do here. So totally a comment that has nothing to do with reality. So yeah. Matthew, go educate yourself. Oh, that's my alarm. Okay. Sorry, that was a bit of a rant on my part. I've had some moments here. Oh yeah, I've got to tell you guys. So this week we were moving some stuff into storage because I'm actually moving to my other house, which is located in West Sussex, and so I basically put the puppies into the garden, and one of them went like batshit crazy, right? It started barking like an idiot, and then a couple of the others also joined in and whatever. So somebody actually called up the noise, like for a noise complaint, and we actually had somebody coming in to check, like, oh yeah, what is going on here? So I explained the situation. So I've had a bit of a week where I basically came back from lugging a whole bunch of stuff for like 6 hours to come back and to have to like tidy up the entire place to make sure that, you know, it all looks great and presentable and whatever. And there were boxes everywhere. There was like bits and pieces. So yeah, so I'm a little bit emotional this week. So if I seem a little bit more passionate and ranty, that'll be why. So yeah, what are your thoughts, Rod? So yeah, we're wasting time, chart analysis. We're just have no idea what we're doing.
Yeah, it's all a big waste of time.
Yeah, exactly. And that's when we all get rich. I'm already doing pretty well, man. So, you know.
I'm just here to sell courses. Yep.
Ocean Blue says, Dee is the master of info in her lane. Trust me. Thank you, Ocean. We appreciate it.
Not much movement on the market order balance there at 1250, not much at all. So I think most of it's just waiting. There's not a lot of orders that are they're going to wait for the earnings.
Yeah, double distribution on ES though. Interesting. A little bit of a belly there. A lot more of the double distributions are happening. I've noticed that. That's a very irregular TPO profile.
Yeah, well, yesterday known, right? We had the reaction to Powell's statement, so it gives you
yesterday
that
was
big move, and today we saw the same thing off the lows in the morning.
Yeah, but still an irregular day, neutral day with a little bit of a pop to the downside, and then an extended auction in one direction with double distribution. So yeah, you don't see that very often, even on big days, the aftermath days. And that's been something that I actually noticed a lot more irregular patterns and irregular day types have been happening, like these pops. It's due to extra liquidity. I know exactly why it's going on. So it's basically you have these super liquid times. So naturally you have a bit of a pop outside of the initial balance, which is then followed with a lot of initiative buying that overshoots and keeps going. So in a way, it's kind of like I would call it an asymmetrical neutral day. I'm actually kind of trying to come up with a way to define that because it's something new. It's not something that we've seen very often. So I might actually do a little update on the next program refresh include those. I mentioned it in crude oil because I have noticed in crude oil every so often we used to have those, but they were so rare. Whereas now I've seen them many, many times happening in all of the products that I trade very regularly. So it deserves a mention, and it deserves a bit of a systematic strategy of how to approach those days and what to look for. Okay. Do you guys take or stay in a trade in the 4 p.m. to 4:10 p.m. Eastern? Well, most of these firms want you to close the trades by 3:59. I think it's only Top Step and Earn to Trade that allow you to trade through the close, the official close. But so I don't really. In fact, I'm already out of most of my trades, unless I'm trading equities. I'm already out by about 3 p.m. anyways. Rod?
So I don't trade any of the prop programs past 350. I know Apex lets you go all the way through the Globex session. They all have different rules. I don't deal with it. Early on, like I messed up a bunch of things, or I lost something because I had too many contracts, or I traded past a particular time, or all these things. These were funded accounts. Like I lost all of them at UProfit for like a silly, stupid rule that I didn't even know they have. So at this point, I'm only trading my live accounts if I'm anywhere close to the cash close. Yeah, and I wouldn't trade, any kind of earnings or anything. Like Apex, I'm pretty sure Apex allows you to trade all the way through till 4:59. But,
really?
yeah, they let you trade all the way to 4:59. I'm almost sure. But
see,
I don't
I
mess around with
I didn't read the rules either. I just kind of assumed that it's
yeah.
I need to go read the
Yeah,
rules.
I think they're the most lenient.
Yeah, interesting. Blanco says, "Hey dear, I'm adopting another English bulldog. Some loser left him a 1-year-old at a dog park. Oh no, chocolate with green eyes, gorgeous." Blanco adopts bulldogs. He fosters loads of them, so he's pretty awesome. So now he's found another one. How can people just leave dogs? Like I really don't understand. I would just my heart would just break. So good on you, man. Keep it up. Like I work with about 12 different charities that all support like stray dogs, and some of them are bringing dogs from people like countries, not people, countries like Romania, Greece, even Serbia. There's a place in Serbia that I'm pretty close with the owner, so on quite a lot of the months, I will just send them enough for the whole month, so everybody can eat. And it's just like her and one other granny that's like helping her keep up the whole sanctuary. So big respect. Flea says Apex, yes, 4:59. Okay, thanks for confirming that. Ben Ryan says I used to foster pitties for years, love all pups. Yeah, me too. My first dog that I had with my husband was a Cavalier Pomeranian who was from Battersea Dogs Home, which is a big rescue center here. Rod, are you teaching your system when you trade live? Your system is using order flow.
Mine's not as order flow based, so it's volume and volatility. So we take a look at, we use the order flow suite. It's called the order flow suite within Ninja, but not really order flow components. So it's standard volume profile and volatility bands, which are standard deviation bands away from VWAP. And yes, it's every single day in the room. That's all I do. Pretty much ridiculously small for the risk budgets that I show for each of the accounts. And generally just the stock indices is what I focus on.
Yeah, cool. Yeah, so your system doesn't use like all parts of order flow, but it uses some components as a supportive factor.
Right. They have the order flow suite within Ninja has 5 different indicators in it, and it does include market profile. It has you can do version of TPO, volumetric bars, all kinds of stuff. But I'm just using the volume profile, pretty straightforward. Not as a TPO, but just volume profile, and then volatility bands, which are derived from VWAP. It's basically
Blanca says, "Wow, that's great." Yeah, sorry. Yeah. Sorry, you want to finish?
No, that's all we do.
Yeah.
So the goal is to
somebody
keep it pretty
said,
easy.
Blank was saying, right now we're hearing a lot of people moving and giving up their pooches. Yeah, there's been a lot of people who bought dogs during COVID, and now they're like, oh, we're going back to work. Oh, we can't. Like, it's not, it's not a dress that you can. I don't know. Let's not get into that. All right, guys. Thank you so much for joining us. We have run out of time. Again, very, very good questions. Always helpful. If you want to check out Rod's trading room, he is in there Monday to Friday. Remind me again, 9:15 Eastern. Is that right?
9:15 Eastern till about 11 a.m. Eastern. You can also go to tradersdevgroup.com. Just hit get started for free, and you can download a 30 video. Not download. You just get access to a 30 video training course if you'd like.
Yeah, there's a link down below to his PTR room, so check that out. If you're still not on the Pro Development Program from Market Stalkers, make sure you check that out too. If you are looking to streamline your processes and to learn how to improve your performance, then that is the program for you. It is pretty extensive, so I basically break it down how I trade in great detail, all the high probability levels that I use and why. So with all of that, I'm going to bid you farewell, and hopefully we're going to see you again next week. Let me just check. I just want to say that I won't be here second part of August. So from the 18th of August onwards, so up until about maybe the 8th of September, I would probably not be doing the live Q&A. Rod, I think you like to have a break for August as well. So what's your schedule
So
like?
we can take a good amount of August out.
Yeah, okay. So just keep that in mind. If you don't see us, that is why. I'm still probably going to be on like Instagram and stuff, so you can like bother me there. You can just go to Market Stalkers. It's pretty simple. All right, so oh, Ben, just one final question. Ben wants to know, Rod and Dee, thanks, guys. Do you guys have a live trade together? Well, we aim to do some trading. Like, for example, I was talking you through the trade that I had in crude oil. You can also find me on Wednesdays at 11 a.m. Eastern in Rod's room, like usually every Wednesday, but sometimes we skip one if we're like super busy or something. So I can talk you through some of the trades that I'm doing there. I can even show you the scenarios and stuff. So if you want to check that out, pop into Rod's room on Wednesdays. Otherwise, you can pop in here on a Thursday earlier than we normally do this Q&A. I do have a members coaching session that starts at 10:30 a.m. Eastern. It is a paid for service. It's about $25 a month. So it's once a week, and it's very informative because I don't necessarily just take questions that are generalized. We actually trade together, and you can see me taking trades here. So if that's something that interests you, make sure you click join on this channel and become a member. All right, thank you guys. I'm going to sign off. Rod, thanks again for coming to answer all the lovely questions in here, and hopefully we'll see you all very soon.
Be good. Bye-bye.